Well, moving on, Chennai-based agri-tech startup WayCool has decided to consolidate its 3 FMCG brands under a separate company. Now, earlier today, the company launched its new wholly owned subsidiary, BrandsNext, that will begin operations under a new CEO and with 108 SKUs. CNBC-TV18's Jude Saneth caught up with WayCool's MD Karthik Jayaraman and BrandsNext CEO BP Ravindran to get the lowdown on what the demerger means for the business. Here's a slice of that conversation.
We are into 3 brands, as you said, and we are into rice, we are into dals, we are into spices, we are into sweeteners. And we are into nuts, dry fruits. So there is a larger portfolio which cuts across the staples platform under the brand name of Madhuram and Kichinji. And now we've recently launched the specialty rice of biryani rice, which is the Kichinji biryani rice. And in the dairy platform, we have milk and curd under the brand of Freshies. And then we have a portfolio under the value-added dairy, which is cutting across paneer, cutting across breads, batter. So if I have to put all this together and see what is the total number of SKUs which would be hitting into the market, is around 108 SKUs actively would be hitting the market across in the southern part of the geography.
And new categories that you're getting into, and how many SKUs are you targeting going forward?
Okay, so new categories, largely we are working on categories which have adjacencies to what we are doing, and that's how we'll be able to synergize what we are doing. So the meal solutions category is one category, which we are looking. Meal solutions largely would address the convenience need of the consumer, right? And then we're looking at the value-added dairy category as a big piece, which also has a lot more headroom to offer, right? Both in terms of revenue as well as margins, right? The third piece is, of course, in the rice, while we are there in the everyday rice, our recent launch of biryani rice is one way of announcing that we will be entering the premium ranges of specialty rice, specialty dals. So that would help us both aspects of top line and bottom line.
And when you say mid solutions, what products exactly are you referring to, Mr.
We're talking about, when I say meal solutions, it's largely about breads, batter. So these are what we call as alternate meal solutions.
All right. And moving forward itself, it is a fully owned subsidiary of WayCool. So I'm guessing that any fundraise, any ownership structure will of course be relatable to what WayCool presently has and will be in the future as well?
That's correct. WayCool is the sole financier and investor into this company. And the company will be a subsidiary of WayCool.
And in terms of revenues itself, how much of WayCool's revenues do the 3 brands that are now part of BrandsNext occupy? And where will growth and revenue share really be derived as far as this new venture is concerned in the near to medium term?
So 25% of our revenues come from these 3 brands. And the brands are expected to double their revenue going forward in the next year. And I think there is a consistent growth path mapped out for these brands going forward.
Right. And so when you say 25%, could you give us some insight in terms of what the revenue was for FY23 and what's the outlook really for the next year?
So the revenues for these brands were approximately 400 crores and they will double next year.
Okay. And for WayCool itself, sir, what was the revenue like?
We hit our plans largely, about 1,800 crores of approximately of revenue and 2,000 crores of merchandise value. We do some products where it doesn't pass through our books. So that was our plan and that's what we hit.
Right.
And we'll continue to maintain a growth path as we go forward.
Okay, so when you continue to maintain growth path, I know for a fact that we're in a time and place where, the startup ecosystem is in a challenge of sorts. Capital markets haven't exactly been the most supportive. So what exactly is your growth outlook going forward? I know that you're confident of maintaining, but is growth expected this year, and if yes, by how much?
See, the focus is on accelerating the path to profitability because we want to be independent. And if whichever part of our growth supports this, we will continue to support that growth. That's the way we are looking at it. So if I were to, I don't want to pick a number at this stage, but any growth that is additive to or accretive to profitability will be supported.
Right. Mr. Ravindran, I have to ask you, in terms of, BrandsNext itself, what exactly is your distribution network going to be like? Because in the FMCG space, the fact is you are going up against some very well-known names, all market leaders in their own right, the likes of a Tata Consumer, an ITC or a HUL. So in terms of distribution, what exactly is the strategy to ensure that you match up and also compete with some of the giants that exist in this space at this time and place?
I think the key for our success lies in the distribution and our ability to reach as many households, as many consumers at the arm's length. So we are at 60,000 outlets as we keep talking to you now, and we intend to exit FY24 with 1.6 lakh outlets. right? That's the kind of leap which we intend to take. And in terms of reach, if I have to take it furthermore, up to 30,000 population towns in the southern part of the country, these 4 states, we intend to be present there. Now that means that's a strong distributor network which would have to fall in place to get this happening. So looking around 700 plus odd distributors to fall in this, to get this 1.6 lakh reach for us. And distribution is going to be a continuous journey. While 1.6 is what we are looking at this year, but then that will not stop because India is huge and South is the most penetrated part. So the only way to keep progressing, especially in a category like this, is to keep reaching more outlets.
On that note, it is time for us to head into a short